Trump just signed an executive order on March 6, creating a strategic Bitcoin reserve, with about 207,000 Bitcoin worth $17 billion. That's more Bitcoin than most countries' entire gold reserves are worth. Meanwhile, China holds $765 billion in US Treasury bonds, the lowest amount since 2009. Everyone thinks the US is building a Bitcoin fortress to compete with China, while China threatens to dump those treasuries as retaliation. But that's not what's happening here. Both nations are locked in a financial prisoner's dilemma where neither can actually use their weapons without destroying themselves first. It's like two people in a standoff, each holding grenades with pins pulled. Whoever throws first blows up both of them. Let me break down exactly how this trap was built and why the numbers are more dangerous than they look. Think of it like this. The US government owns about 207,000 Bitcoin, worth approximately $17 billion from criminal seizures. They got these from shutting down illegal operations like Silk Road, the Bitfinex hack, and fraud rings. Trump's executive order says the government cannot sell any of this Bitcoin. It sits there as a reserve asset, like digital gold locked in Fort Knox. That's the official number everyone sees. But here's what most people miss. China holds $765 billion in US Treasuries. That dropped from over $1 trillion just 3 years ago. China is now in third place behind Japan and the UK for the first time since 2000. They've been quietly selling for years. From 2022 to 2024 alone, China reduced Treasury holdings by $281 billion. That's a massive exit happening in slow motion. And here's the sneaky part. While reducing treasuries, China built the world's most advanced digital currency system. They hold 68% of global blockchain patents. The digital yuan has processed over $7 trillion in domestic transactions. They're building an escape route from the dollar system using technology, while the US builds an escape route using Bitcoin. Both trying to escape the same trap they created together. So the US is betting on decentralized Bitcoin, while China bets on centralized digital yuan, both trying to get out of the dollar system that's been running the world for 80 years. Now, the US has pulled something like this before. Remember 1971? The US was running trade deficits, and gold reserves were draining fast. Foreign countries kept exchanging dollars for gold. President Nixon was watching America's gold vault empty out. So on August 15th, Nixon went on TV and announced the US would no longer exchange dollars for gold. Just like that. No warning to foreign governments. The rules changed overnight. Fast forward to 1985. Japan had become a massive creditor holding tons of US debt after decades of trade surplus. Japanese exports were crushing American manufacturers. So the US forced Japan to sign something called the Plaza Accord. It made the yen appreciate by 40% practically overnight. Japanese exports became expensive and imports became cheap. Japan's economy entered what they call the lost decades. Stagnation that lasted 30 years. That's the lesson. When you control the reserve currency, you can change the rules mid-game, and creditor nations holding your dollars end up trapped. They can't dump those dollars without crashing their own wealth. Japan learned this the hard way. China watched Japan get stuck and learned the lesson. That's exactly why China is building exit strategies now. The digital yuan and slow treasury reduction are both attempts to escape before the US changes the rules again, like they did to Japan. So what happens if China actually tries to use those $765 billion in treasuries as a weapon? Let me walk through the nightmare scenario everyone fears. Let's say China announces an emergency sale of $200 billion in US treasuries over 30 days. Maybe it's retaliation for Trump's Bitcoin reserve. Maybe it's because of escalating tariffs on Chinese goods. Doesn't matter. The moment that announcement hits, the treasury market floods with sudden supply. When a seller that big dumps that fast, buyers disappear. It's basic supply and demand. The 10-year treasury yield jumps from 4.5% to 6% in just days. Think of it like everyone trying to sell their house on the same street simultaneously. Prices collapse because buyers know they have leverage. Same thing happens with bonds. Nobody wants to catch a falling knife. And it gets worse. Mortgage rates are tied directly to Treasury yields. When Treasuries spike to 6%, mortgage rates jump to 9 or 10% overnight. Your $300,000 home refinance payment jumps from $2,000 monthly to $3,000, just like that. Housing market freezes completely because nobody can afford those payments. Then the stock market crashes. Investors flee to cash. Stocks drop 30 to 40% in weeks. Bitcoin actually spikes initially as people look for a hedge against currency chaos. Could hit $150,000, but then crashes back to $70,000 when everyone needs cash to cover margin calls. Volatility goes insane. Regular Americans see retirement accounts drop 40%. Gas prices jump because the dollar weakens against other currencies. Grocery bills up 20% as import costs surge. Panic spreads through every neighborhood. People stop spending. Businesses cut jobs. Fear feeds on itself. The Federal Reserve gets forced to emergency intervene. They start buying treasuries to stop the collapse. But that means printing massive amounts of money. Inflation fears explode. It's a lose-lose situation. Either let the bond market collapse or print money and trigger inflation. Global recession begins as credit markets seize up. Banks stop lending because they don't trust the system. Businesses can't get capital to operate. Unemployment rises. The US loses credibility as the reserve currency. That damage becomes permanent. Other countries accelerate their exits from the dollar system. That's the nightmare everyone worries about. But here's the reality. The moment China dumps those treasuries, China destroys itself first. China's $765 billion in treasuries lose 20 to 30% of their value instantly when yields spike from the selling pressure. That's a $150 billion immediate loss to China's central bank. Gone. Just evaporated. Think about that. China shoots itself in the foot to hurt the US. Then China's yuan crashes. Because dumping treasuries means either selling dollars and buying yuan, or selling dollars for other currencies. Either way, it signals complete panic. Capital flight accelerates. Chinese citizens and businesses rush to get money out of the country. China already struggles with capital controls trying to prevent money from leaving. This makes it 10 times worse. It's like burning your own house down to smoke out a neighbor. Sure, the neighbor suffers from the smoke, but you lost your entire house. China's remaining treasury holdings become worthless. The thing they were trying to preserve gets destroyed by their own actions. And the domestic Chinese economy destabilizes right alongside the US economy. Chinese banks hold treasuries as reserves on their balance sheets. When those values crater, Chinese banks see their balance sheets implode. Credit crunch in China mirrors the credit crunch in America. Chinese manufacturing export orders collapse because global recession kills demand everywhere. Let me do the math for you. $765 billion in US Treasuries. If those lose 25% of their value in a forced dump, that's $191 billion gone instantly. Plus, China holds approximately $1 trillion in total dollar-denominated assets, including corporate bonds and agency debt. Another $200 billion in losses there. Total loss right away. $400 billion evaporated from China's reserves. That's generational wealth for an entire country just gone. So China can't dump treasuries without destroying its own wealth and economy. The US can't let the treasury market collapse without destroying reserve currency status and triggering a depression. Trump's Bitcoin reserve doesn't solve this. It's just another asset both sides accumulate while trapped in the same standoff. Both nations stuck in mutual, assured economic destruction. Neither can press the button without dying first. If you're starting to see why this trap has no easy escape, hit that subscribe button right now. I'm breaking down the economic power plays mainstream media won't explain. New videos every week showing you what's really happening behind the headlines. Click subscribe and turn on notifications so you catch the next breakdown before the crisis unfolds. But they're not just sitting around doing nothing. Both sides are building escape routes. Watch what's actually happening. China launched something called Project Mbridge. It's a cross-border payment system using central bank digital currencies. The central banks of UAE, Saudi Arabia, and Thailand are testing it. The system processes transactions without going through SWIFT or using dollars as the middleman. They launched the pilot back in 2020. Progress has been significant, from zero to multiple billion-dollar pilot transactions in 5 years. China leads the entire world with 68% of blockchain patents. Over $7 trillion has been processed domestically through the digital yuan. They're building the infrastructure for a post-dollar world piece by piece. But here's the problem. It's still too small and nobody trusts it internationally. Countries don't want China controlling the payment rails the way the US controls SWIFT. Building that level of confidence takes a decade minimum. China is racing against the clock. The second strategy is gradual Treasury reduction, while accumulating gold and indirectly building Bitcoin positions. They went from over $1 trillion to $765 billion over 3 years. Cut $281 billion from 2022 to 2024. Now they're the third placeholder behind Japan and the UK. But this strategy is too slow. At the current pace, it takes another decade to fully escape, while tensions with the US escalate much faster. Every tariff threat, every sanction discussion, every Taiwan crisis speeds up the timeline while China's exit strategy crawls forward. And the crisis is accelerating faster than their exit plan. Trump signed the Bitcoin Reserve Executive Order in March 2025. The tariff war escalated with threats of 100% tariffs on Chinese goods. China retaliated with rare earth export controls. Bitcoin markets saw $19 billion in liquidations during recent US-China tensions. Volatility spiked across all markets. China started serious treasury reduction back in April 2022. 3 years later, they've reduced from $1.07 trillion to $765 billion. That's a 28% drop. But they still hold a massive vulnerable position. They're trying to climb out of a hole while someone's digging it deeper. So China probably has 18 to 36 months before they face a forced choice. Either accelerate the dangerous treasury dump or accept permanent dollar dependency as alternative payment systems mature. But China gets left behind. The window is closing fast. And it's not just China that's stuck. The US faces its own impossible choice. America can't let the treasury market collapse without destroying reserve currency status, pension funds, and the banking system. Can't aggressively weaponize the Bitcoin reserve without proving the dollar system is fragile and accelerating de-dollarization globally. Every aggressive move validates China's argument that the dollar is a weapon. China can't dump treasuries without destroying its own wealth and triggering domestic crisis. Can't stay fully in the dollar without remaining vulnerable to sanctions and financial control. Trapped between a rock and a hard place. Both sides stuck because this trap was built through 40 years of trade surpluses recycled into treasury purchases. The benefits created the dependency. Now that dependency became a weapon neither side can actually use. It's a standoff where both guns are pointed at both heads simultaneously. And here's the funny part. For 40 years from 1980 to 2020, this arrangement worked perfectly for both sides. Nobody complained. It was the foundation of globalization. The US benefited massively. Cheap imports from China kept inflation low for decades. Americans bought inexpensive electronics, clothing, furniture, everything. Massive trade deficits got funded by China buying treasuries with the dollars they earned. The US effectively had unlimited deficit spending because China bought the debt. Reserve currency status maintained global power and influence. China benefited just as much. Export-driven growth employed hundreds of millions of people, lifted more people out of poverty faster than any event in human history. Dollar reserves accumulated building national wealth. Stability through a predictable system. Access to the US consumer market created the Chinese economic miracle. The good thing created the trap. The more China exported, the more dollars they earned. The more dollars they earned, the more treasuries they bought. The more treasuries they bought, the more dependent both nations became. Success built the prison brick by brick. Now both sides are locked inside looking at each other through the bars. Those benefits turned into mutual vulnerabilities. China's wealth is hostage in the dollar system. The US is addicted to cheap imports and deficit financing. Neither can escape without paying a massive price. The golden handcuffs became iron shackles. So what happens next? 3 possible things over the next 3 to 5 years. Scenario 1. Manage slow transition. This has maybe a 15% chance of happening. Both sides somehow cooperate on gradual de-dollarization over 10 to 15 years. China reduces Treasury holdings slowly, while diversifying into gold, Bitcoin, and SDRs. The US accepts a reduced but still dominant reserve currency role. Alternative payment systems like mBridge coexist peacefully with SWIFT. Different regions use different systems. Bitcoin stabilizes as a neutral reserve asset alongside gold around $150,000 to $200,000 long term. Markets adjust gradually. No sudden crisis, but a slow power shift eastward. This requires cooperation and trust that doesn't exist right now. Scenario 2. Prolonged standoff with regional fracturing. This has a 70% chance. It's the most likely outcome. Current tensions continue indefinitely. Both sides remain trapped in mutual dependency but unable to cooperate. China accelerates digital Yuan adoption and mBridge regionally in Asia and parts of Africa. The US tightens sanctions and pushes allies into the dollar system harder. The world fragments into currency blocks. Dollar zone in the Americas and Europe. Yuan zone in Asia. Maybe a crypto-friendly neutral zone in between. Neither side wins cleanly. Bitcoin remains volatile in the $60,000 to $130,000 range as it gets caught between competing powers. US influence slowly declines, but there's no dramatic collapse. Multi-year grinding competition with no clear winner. Just exhaustion. Scenario 3. Crisis trigger event. This has a 15% chance. Some external shock forces someone's hand. Taiwan conflict. Severe tariff escalation. Financial crisis. Something breaks the standoff. China makes an emergency treasury dump. Markets crash globally. Federal Reserve emergency intervention. A Bretton Woods 3 moment where the entire monetary system gets restructured under crisis conditions. Bitcoin spikes to 150,000 plus in initial panic as people flee to alternatives. Then crashes back to 70,000 on liquidity crunch, as everyone needs dollars for margin calls. Global recession. Massive volatility. Forced painful adjustment for both sides. Eventually, a new system emerges, but at huge human cost. Most likely outcome? Scenario 2. The prolonged standoff. Because the trap keeps both sides from extreme action, but doesn't provide any cooperation mechanism. We get a prolonged, uncomfortable standoff with slow dollar decline rather than dramatic collapse or peaceful transition. It's the worst kind of outcome because it drags on for years, creating uncertainty but never resolving. So what does this mean for regular people trying to protect themselves? If this prolonged standoff unfolds, here's what happens to your money. The dollar slowly weakens over the next 5 to 10 years. Not a crash, just a grind lower. Prices for imports rise 10 to 20% cumulatively. Your purchasing power for electronics, clothing, manufactured goods declines gradually. You notice it at checkout, but it happens slow enough that people adjust. Treasury bonds deliver poor returns, possibly negative real returns after inflation. That safe retirement portfolio of 60-40 stocks and bonds becomes riskier as bonds lose their safe haven status. The thing your parents relied on for safety doesn't work the same way anymore. Bitcoin and gold see increased institutional adoption as reserve assets, but with massive volatility. Expect 50 to 70% drawdowns even in a long-term uptrend. Not for weak stomachs. You need to be able to stomach watching half your investment disappear temporarily. Here's how to protect yourself. Physical gold should be 15 to 20% of your portfolio. Central banks globally are accumulating gold as an alternative to dollar reserves. China is buying gold alongside Treasury reduction. Gold has no counterparty risk. When the currency system gets unstable, gold holds value. It's been doing that job for 5,000 years. Not exciting, but reliable. Bitcoin allocation should be 5 to 10% maximum. It benefits from the de-dollarization narrative as both sides accumulate. Trump's executive order validates Bitcoin as a reserve asset. The order prevents the government from selling, which creates a supply squeeze. But expect huge volatility. Position size matters. Only invest an amount where you can stomach 50% drawdowns without panicking and selling at the bottom. Diversify away from pure dollar exposure. Swiss franc, Singapore dollar, Norwegian krone. These are currencies backed by strong fundamentals and neutral geopolitics. Put 10 to 15% of liquid savings in non-dollar currencies. It's a hedge against slow dollar decline without wild speculation. Just basic diversification. Avoid overconcentration in long-term US Treasury bonds. The asset that was the safest thing for 80 years might deliver the worst returns over the next decade. If China exits gradually and inflation stays elevated, long bonds get crushed. Don't fight the last war. Take action now and rebalance your portfolio toward hard assets and currency diversification. Don't wait for crisis headlines. By the time CNBC is screaming about currency wars, Bitcoin is already at 150,000 and gold is at 3,500. The window to position yourself is right now during the standoff phase, before any trigger event. Move while things are still relatively calm. Look, this isn't about picking sides or rooting for economic collapse. If this changed how you see the dollar system and currency war, if you now understand why both superpowers are trapped in mutual dependency, then you need to stay ahead of this as it unfolds slowly over years. Subscribe to this channel right now because I'm tracking every move in this standoff as China reduces treasuries and the US builds Bitcoin reserves. Next video drops in 3 days, and we're breaking down exactly how the Federal Reserve will respond when a treasury dump actually begins and which assets survive that crisis. Don't wait until it's too late. Hit subscribe, smash that notification bell, and I'll see you in the next one.